Welcome to iGlobal Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. To begin with, the Australian dollar bears have not backed away since the bearish sentiment began 5 days ago. And this was all because of the rejection from the 60-day moving average and also the posted outside range day, which doubled up the negative sentiment along with the bearish implications to send the Australian dollar on a journey to the downside, and now takes on the challenge towards the level of 75 cents. One thing to note is that this bearish streak may soon come to a short-term end, purely for the fact is that the technical implications are extremely oversold. Therefore, we could see a rebound back towards 76.15. It is viewed that this move would give an opportunity to start shortening the market once again, as the bearish sentiment is likely to remain in the broader picture and still hold a focus to 75 cents. So do keep an eye out if we do get a rebound in the next 12 to 24 hours. It is interesting to see that the dollar index has posted fresh multi-yearly highs of 91 this morning. Also on the back of the bull trend is the fact is that US Treasuries have broken above the 3% handle, and now from a tightening cycle that's still in the US is still contributed to raising inflation and also maybe seeing a faster rate hike of not 3 this year but 4. This would actually broaden the US dollar picture further and bring in a euro target of 118. We do have confirmation that 121.80 has exposed the downside, but with a little bit of the divergence is seen here, could see a small play to the upside. Now, the reason behind that is that we do later today have the ECB rate decision at 9:45 Sydney time, which could add additional losses, but nevertheless a probably choppy session, as Mario Draghi is likely to attempt to buy more time as measures of underlying inflation remain subdued and have yet to show convincing signs of a sustainable upward trend. Therefore, this could actually see euros fail any to rally towards 122.15, and as I say, 121.80 is broken. Dollar index has broken the broad downtrend of 90.40, and also with other implications as well from the technicals and also from this bearish double top and the breakneck line of 121.80 does give us further downside exposure with 118, with the dollar index now looking to 93. Now the close this morning for the index was at 90.97. The dollar yen, from the view that I've had for some time now, is it finally broke the barrier of 107.70.90, and the last 3 bullish candles have actually extended the target now of 109.15 to now challenge this level of 70. We are extremely overbought, and I do at this stage would sell out my longs and actually sit on the sideline, because I'll be looking for a pullback, and if we do get that pullback, could see a move back to 108.85 to 108.35. This in the short term will give us opportunity to get to stage long positions again and expect to see this rally continue, behind the fact that the dollar index breaking the broad downtrend which emanates from a 14-year high when Trump came to the Oval House in November 2016. So it was a significant level. So therefore could put dollar yen back on track eventually to 110, 111. A very good sign for the market in the bullish case, and along with the yields pushing to 3%, that could actually see a bit higher. The pound still remains exposed to the downside since the break of the 140.35 uptrend, and at this stage looks towards the target of 138. A little bit of divergence is coming through here, so be on your guard not to have too much of a short position, as we could see a snap to the upside. Now we do have the Bank of England on Friday, Mark Carney, to speak, and this could put a bit of a jitter into the market, so just be on your guard. On the day, range is around 139 to 140. The outlook for gold has broken down a little bit, but still holding above the 1,318 level. What is actually being contributed to this bearishness is the fact that, for one, we've got a stronger US dollar, we've got rising bond yields, and also the geopolitical tension again with China and Russia is also eased and somewhat lessened the appetite for the risk of a further rally and also for safe haven demand. Although the view is that as long as 18 holds, we should see a rebound back towards possibly 26 to 31 to 38. But a break underneath 18 will give further exposure to the bullish foundations. And as also to add to that, you can see the market is still played in this 1,300 to 1,365 range for all of this year, and is likely to continue on with this pattern. So under 18 could see about $15 drop, but buying is probably likely to emerge back towards that downside target. Silver also could be taken to the downside on the factors of weaker gold, and underneath 45 would see further exposure to this base that comes in around $16, $15.20. Overall, I'm not very, or at least not bearish in terms of how the gold looks or most of the markets, because I feel that eventually this will snap to the upside, and this just gives us, once again, buying opportunity. What has hurt the market is this very heavy decline that we saw above $17 and crushing the support 85 has left the market a little bit on the wounded side when it comes to the bulls. So we could see from the technical point a little bit of weakness, but I'm soon expect to see a recovery. Oil, I am not bullish. I feel the market has found a top somewhere around $70 a barrel, and after the two rejections you can see here is now posing further threat to the downside, and I'm looking at $66 a barrel as a target, with the uptrend rising now to $63.20. Resistance on the day is seen around $69 to $70 a barrel. Well, that wraps up for today. Thank you very much for joining me. As always, look out for the intraday report, and I hope you enjoy the rest of the day that's ahead.